Hello YouTube, Gold Silver Strength here, and this will be a price action analysis for GLD, the paper gold derivative, and whether this 5% retracement is enough for you to load up on some stocks or options and make some money. If you haven't subscribed to the channel, please do so that we can continue pumping out more videos, and hit a thumbs up so that the YouTube algorithm also knows that you are enjoying the video and that this analysis is providing you value. So let's get started with the moving average cross from the daily chart. Right now, today's candle finished in between the 9-day and 26-day moving average. Right now, it is a severe slowing down of the bullish momentum. And looking back just up until the March, we can see that truly a very bearish sign would be if it broke under the 26-day moving average. So right now we're in between, so we don't really have too much to go off of based off history. Usually this is signals to me that there is a retracement coming if it bounces off the 26-day moving average. In terms of general patterns for resistance and support levels, there was one which it sort of broke through. It's between 181 and 179, which GLD did finish in between, and there are quite a number of smaller and minor support levels, but the big one right here you can see is 165, where all these candles formed a local high and local low all these different months in June and May, and even in late April. So in terms of where supports are, there is a lot for GLD, a lot of minor ones. So GLD does need a lot of momentum to continue on this bearish run, especially with all these price action historical patterns in its way, so that it needs to break through and just continue on downward. In terms of time pattern, let us analyze how many candles from a gap does it take to get within the gap it formed, or at least above the opening of that same candle. So going back in history, we can see one instance right here in the beginning of March. So let's count 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Let's see if there's any more examples in history. Right now we're currently in 2019, and I do not see any from the daily chart. Yeah, so really GLD doesn't like to gap up or down, and recently it's just in 2020 that we experienced such huge gaps in between the candles. So from a time pattern perspective, we have one example to go off of, which took around 9 days for a literal V-shaped recovery for GLD, and we can expect that for our retracement right here. In terms of Fibonacci, let us go do a retracement. We'll start off the lows here. So currently it's hitting the 38% retracement, exactly right on the nose. This can be a point where gold wants to bounce off from, but let's keep in mind the other possibilities. It can go up to the 50% retracement, which is not too far away, 176, or it could retrace much more severely at 172, also another possible option. But if it does hit 165, I would be a little bit more cautious, and that, depending on what happens in the future, could be a possibility. So right now we're looking at a 38% retracement, so it wouldn't be uncommon for GLD to bounce off from this level in the future. So that is just another point of where you can place your purchases if you want to buy some shares now to hedge your risk, put a small position here and average down as it continues to retrace at major Fibonacci retracement levels. In terms of historical patterns, let us see how long of a bull run did it take for it to retrace this severely. So from April to June, we saw sideways trading, and then we have about a month and a couple of weeks of bullish growth, and then now we have this severe retracement. Let us compare that to the retracement that happened in March, and let's see if we can find any parallels. So again, we saw some sideways trading right here. This one was 3 months, from September of 2019 to December of 2019. And we saw another actually close to 2 months of growth, followed by another V right here. So right now, gold is looking as something that likes to repeat itself over time. Short term at least, we can see that it likes to consolidate, follows a upward growth, and then it chops sideways. Let us go back in history, just up until 2019. Again, a little bit of sideways momentum right here, followed by bullish growth, 1V, deep V, and then here we are, and then back again. Overall, I have a neutral opinion about GLD. There are some signals that say it can potentially bounce off. You have some general support zones right here, and right here. It'll help if I draw the line. You have some support right here. Another right here. You have one big one right here. You have a ton of minor supports as well. You have Fibonacci at the 38% mark, showing that it can bounce off from that retracement level. But at the same time patterns, historical patterns, after bullish growth followed by a knockback down, a gap down in retracement, you can see that it took 9 days in March to recover with a V-shaped recovery. Before then, it would have a V-shaped recovery and then consolidate. So short term at least, you can be looking at possible retracement followed by a consolidation, but long term is bullish. After it recovers or if it consolidates, it's going to go straight back up using the example we found in 2019. And right now, it's no different. So whether you continue to buy positions now or decide to manage your risk by buying a smaller position, and if it does continue to go down, you average down, that'll be your decision to make. That will be it for the analysis for today. And thank you for listening. Are you tired of losing in trading and investing? Check out my videos where I do a bare bones analysis on just the price action. No fancy indicators, no gimmicks, just trend analysis and winning here. And I'll see you guys in the next video.